Hello guys, welcome back to the channel. This is Hassan and I'll be taking you through today's analysis, and this is card JPY on the screen. In this video I'm going to be showing you how our strategy works. This is a step-by-step strategy that works efficiently if you follow the steps very well, and is what I currently do use. So the first step is we do top-down analysis. You go to the high time frame of your choice. You can go to the daily, you can go to the weekly, you can go to the monthly, you can go to the 4-hour or 1 hour, depending on which kind of trader you. If you're a swing trader, you can go to the weekly or daily. If you're a position size trader, which I rarely see those people, you can go to the monthly or 3-month. Then if you are day trader, daily, 4-hour, if you are scalper, then definitely use 1 hour and below. So I'm going to be taking you through this analysis, and this is CAD, this is USD CAD. But before I go through the charts, guys, you have to subscribe to the channel. As usual, we are heading towards 200 subscribers, so you subscribe to the channel so I can go ahead with the video, can proceed with the video. So what you're just seeing on the screen is USD CAD, and I'm just trying on different pairs to show you that this strategy works across all pairs. So subscribe, 5 seconds, and then we proceed. Okay, I hope you have subscribed, guys. So let's proceed. So on the screen there is USD CAD, and this is one of the measures. What do you see? First, you see, let me first delete this here. Immediately you go on the screen, you see that price is in a downtrend. This is a lower low, this is a higher low, lower low, higher low. Now it has created a lower low. By the closure of this candle, it created a lower low. So we are hoping that price is going to come to this supply zone. So how do you mark our supply zone? This is, remember, this is the weekly supply zone. So this is how we mark our supply zones. It can be one candle or it can be a cluster of candles in that area. So this is what you have as for your demand zone. This is not supply, this is demand for buys, then supply for sales. So this is your demand zone. This are collected a cluster of 2 candles. So now the demand is simply a simple area of consolidation or equilibrium before price breaks out and goes high. So we expect that this is where the institutional buyers came in and push price upwards. So when price comes back to that area, we are expecting to buy that price from that demand. Okay, so now with that in mind, after I have gone to the chart, the first thing you do is identify your areas of demand and supply, or areas that can act as a magnet that price can or would want to move towards them. That is the first thing you do when you go to the chart. So this one, we have this one here. It is our area of demand. So at that point, let's say price was here on this candle here. So what do? You know where price wants to go. That is the first thing. So the second thing is understand how price wants to go there. So this is a clear case of, you know that you want to go, let's say you want to move from Canada to China. Yes, you want to move from Canada to China, or India for that matter. So you want to move from Canada to India. Now you have the objective, but how do you get to India? How do you get to move to India? What do you use to move to India? You can use an airplane, you can use a bus, you can use a motorcycle. It will take you years. You can use a vehicle, any, to move to India. So now you want to know what are you using to get to India. So for example, this is where price is, this is our Canada, and this is where I want to go, where we anticipate to go. This is our India. How do we get there? That is now where demand and supply comes in. So you identify the direction on the high time frame, and then you go to the lower time frame, use demand and supply to enter for your positions towards that direction. So I'll give you an example. The thing is simple and straightforward. So we shall use, after price reached here, it reached this demand zone here. After price reached this demand zone, it reacted perfectly and then went up, reacted perfectly and bought up to this area. So it reacted 1, 2, 3, 4, a full month of price action, bought up to that area. However, after price buying from that area, the next month we got a bullish engulfing candle breaking this demand. Let me show you, let me mark for you a line. So we got a bullish engulfing candle which engulfed the previous 2 weeks of price action, breaking this demand area here. So it closed as a bullish engulfing candle below this demand, meaning this demand was violated and we were likely to sell down to the next area of demand. I told you demand areas act as they act as magnets for price action. Price will always move looking for liquidity. Price will always move looking for demand, where the previous high buyers or sellers were situated. So what happens is, after this demand was broken, then that means we were heading down, or chances of heading down were high. So how do we head down? Do we just enter because the demand has been broken? No, we don't just enter. That is now where we go to the lower time frames to find our entries. So now I'm just going to mark the closing price and opening price of this candle. This is the opening price of this candle, and then mark even the closing price of that candle. Let me mark it well, like that. I think that is on point. I also just put a line a blue line, such that we can see it on the daily when we go there. So what do you see? This was the demand. You see how it is clear on the daily? You see how it is clear on the daily, guys? This was the demand zone, this huge push away, engulfing these 2 candles, creating a demand zone. This was the demand zone that was created. So if I stretch it to the left, you see that it was broken by this candle. Broken, this is the line, it was broken and the candle closed down. So this demand zone was violated, meaning we were going back to the down side because the demand was violated. Good. So now that we know, let me just remove this. So now that we know that we were going to the downside, this is the engulfing candle, the engulfing weekly candle that we marked. This is the opening price of that candle, should be Monday, yes, and this is the closing price of the candle, which should be Friday. So let me just stretch to the closing price of that candle. Good, which is Friday. So as this price closed, it gives us what we want, or the vehicle that is going to the plane that is going to take us to this supply zone. Remember, we said we just enter because this candle has closed as engulfing candle. We wait for something that is going to take us there, and that something is the supply zone that is created within this week of price action. So now what happens is, let's go back to the weekly. I show you something. I want to take you step by step. If you get lost, guys, let me know, step by step. So what happens is, this week closed as an engulfing candle and we have marked it well. So now our entries are going to be in the next week, which is this one, in the next week, which is this one. So I'll mark this next week with this line, with the blue line. You see, this is the week that we're going to find in our entries, because the other one has closed. So the next week will be our current week. So I'll mark it with this blue line. However, I'll remain with this opening price and closing price of that engulfing candle. So I'll mark it with the blue line. So when you go down to the weekly, the daily, you're looking for those areas that are going to act as magnet to give you a vehicle to the downside. So as this week was closing, it created a supply zone here with this candle. See this daily candle? It created a supply zone. Let me just make it small. It created a supply zone here. What are the supply zones? Supply zones are simply areas of consolidation before a huge downward move or a huge upward move or an impulse. And if you look at this one very well, this is the clearest supply that I would want to trade. Look at the move away from the price. Look at the move away. Very huge candle, even breaking the structure here. Huge candle breaking the structure. This is a confirmation that this is a real supply zone. So now, remember, this is the week that we are starting in. This is Monday. This is the closure of the previous week. This is the new week. So the new week opens and immediately it shows us that it is going up. So when it is going up, where is it going? It is heading to this supply zone. So you're going to mark, because we confirmed the break of structure here, so we're going down. You're going to mark here, put your position size. The stop losses are go slightly below, above for wiggle room, and then the next level target, first level target, will be to 100% retracement, which is here, 100% retracement. Then the overall target for that will be now a swing trade will be down here, which is around target 300 pips to the new demand zone that is down. This is the weekly demand zone that is down. This will be where the target will go. So the LD trade will be, the week will open Monday, Tuesday, Wednesday. It does not tap in. Then Thursday it tapped you in, and then immediately tapped you in, started dropping. Thursday dropped, Friday it dropped. Then this was Monday. This is now another week. Monday, Tuesday, Wednesday, Thursday, Friday. It kept on dropping. Are we together up to that, guys? I hope you are together up to that. As the other week closed, gave us a demand zone. Then this big move away created a supply zone. So price retraced the supply zone, and you see you can even get a short-term buy up to this area here, up to the supply zone. After buying up the supply zone, you know your target is going to be slightly below the supply zone, and then you take price to the downside. So that is it for USD CAD the other week. So now I want to show you an example of the previous week, because these are 2 weeks ago. So now I want to show you the current week, because someone will say, but now you're using previous price action. That one seems simple to pick. Yeah, it is simple because I know what I'm doing, but if you don't know what you're doing, I can tell you to explain and you've totally failed to explain it. So now come to the previous week. What do we have in the previous week, which is going to give us a trade of this week? So we have this was the closing price of the opening price of this week, and then the closing price of that week. Remember, I told you, first thing first, when you go to the charts, identify on the weekly time frame, identify, okay, not the weekly time frame, but any time frame that you're using as your high time frame, identify the areas of demand and supply where price can use as magnets, or where price is likely to go to. 2, go and mark the previous week closure and opening price of the previous week, of the previous candle. Let's say I'm using the weekly time frame, so I'm using the previous candle opening, mark the closing and opening price of that candle. Good. So after that, go to the daily or drop the one time frame below and look for areas where you can, if now you have identified that you're going down, so you look for supply areas on the one time frame below. So now for this case, we have marked, this is our previous week. So the current week is here. So our previous week, if you go to it, we shall drop to the daily to look for areas of supply and demand. So in this case, we are looking for supply. So what do you see on this week? It opened from here, dropped up to here. So this is today's candle. It is still printing, but the previous 5 candles, 1, 2, 3, 4, 5, closed here. So during their closure, do you see any area of demand and supply? I see some area of supply there. You see that indecision candle and this big move away, it created a supply zone there. So now with this one, it was not that move, so you're going to go to the 4-hour. When you go to the 4-hour, what do you see? What do you see on the 4-hour? It is now clear. In this area of consolidation, there is a supply zone that was created here, just to refine this candle here. Refine it to that. This is supply zone. This is an indecision candle and a very huge move away. These are the supply zones that I want to trade. Indecision candle, huge mover which broke even structure. Same thing like we saw on the weekly. Indecision candle, very huge mover, broke structure here. So price came and it tapped in, then started dropping. This was Friday. This was Friday. This was Friday. This red candle was Friday. So this is the candle that opened today. So the trade is already in play and it is already in profits. So if you didn't enter that trade, it was already in place. So when if I put this one here, this is also resistance. Remember, resistance broken turns into support, and then there is a supply zone there. These are the type of trades that I always and always want to trade. So how did you enter this trade? You'd put your entries here, and then stop losses go below there. Stop losses go below there, and then you're targeting first the high, that is your first level target, which is around 50 pips, and then you're going down up to 100, I think 40 pips for the overall target. So guys, this trade is already into play and it has moved, but however, if you want to take advantage of it right now, you would want to wait to go to lower times and below to look for supply areas that you can sell from. I see one here, but it's not clear on the 1 hour. Let me go to the 2 hours. It's not there even in the 2 hours. 1 hour, not there. I don't want to go to 30 minutes. So guys, this one we shall just wait as this week plays. We see whether it could create some. I'll wait for this week and see whether it will create some spaces to enter, but for now the trade is already into play and there's nothing we can do about it. But if you had supported it earlier, that is how you would enter. The strategy is simple: demand and supply zones combined with top-down analysis. That is what I use, and it is very, very, very simple. You'd use it at any time. So guys, that is all for today's video. That has been the analysis on USD CAD. We are expecting a sell until this weekly supply and weekly demand zone. So USD CAD, you could keep selling. That is what we see on our analysis. We shall keep selling until that demand zone before we can start looking for buys. Okay guys, subscribe to the channel and also like the video if you have learned something from it. If you have not learned something from it, please go and watch the video over and over again until you get something from it. That is all for today. Bye for now.